Okay, great. Well, again, thanks for that introduction. It's great to be here. Thanks for inviting me. Just make sure everybody can hear me. I know you can. Uh, and welcome, traders. I'm going to talk today about East meets West, about Ichimoku Cloud and Elliott Wave, and what happens when two great trading systems agree. And I say, profits explode. Right. And please ask questions as we go. Make it interactive. Quick disclaimer, everything I present today is for education, information purposes only. I will look at some charts in live markets, but again, I'm not a financial advisor. I don't know your situation, and I'm not making a recommendation for you, but rather explaining how I trade. Okay, today I'm going to walk through these areas here. I'm going to give just a really brief overview of Ichimoku Cloud. In case you don't know, or just a refresher, I'm going to give a really, really brief, simple view of Elliott Wave theory. Then I'm going to talk about how I use them together, and that's the real power, where something really exciting happens. And then I'm going to talk about adding risk management to that, and do a quick how we can scan using Ichimoku Cloud and Elliott Wave together to come up with, narrow down a long list of trades and come up with something to trade really, really quickly. Now you can download this presentation. I'm going to go through it pretty fast, but you can download a copy of this, and I'm going to post a link right now in the chat area. So I think I just sent it to Renee. I think I'll send it to everybody now. There. Okay, so you can download the PDF of this presentation and just study it at your leisure. Okay. I'm checking questions, see if anything's coming in here, and there's a bunch of blanks. Have a different display. I hope that's working. Maybe a couple people just type in a yes or something, so I make sure that the questions window is working correctly for me, and then I can hear you, or answer your questions. You can hear me, and I can answer your questions. Yeah, everything's blank. There's a little malfunction here with GoToWebinar for me. I don't know if you can repost them to me, Renee, because everything's blank in the question.
Yeah, I can see them, so I can either, I'll try to send them to you if you can see them, otherwise I can read them out loud to you.
Okay, so as we get into it, I'll pause a few times and see if there's any questions, because yeah, I've never seen this in GoToWebinar, but everything's blank in the questions thing. That's all right, we'll press on. Okay, let's talk about Ichimoku Cloud. So the Ichimoku Cloud, it's also known as Ichimoku Kinko Hyo. It's a versatile indicator, and it's really good at defining support and resistance and identifying trends. And it does provide some trading signals. That Ichimoku Kinko Hyo translates to a one-look equilibrium chart. And this indicator, it was developed by this guy, Goichi Hosada, a Japanese journalist, and he developed it. He started working on it back in the 1930s, and he spent like 30, 40 years studying it and perfecting it, and he finally published it in a book in 1969. And you got a picture there of Goichi with his glass of beer there, and it's probably Kirin beer, Kirin Ichiban. Ichi means #1 in Japan, in Japanese, and Ichimoku Cloud is one look. So what does it look like on a chart? So here is the Ichimoku Cloud on a trade station. And we've got the American Eagles Mines chart showing here. And again, I think it does a great job of identifying trends and predicting support and resistance for that trend. Now there's really 6 elements or pieces of the Ichimoku Cloud indicator. Let's take a look at the individual parts. So there's 2 lines you'll see. I'm pointing to the yellow line. There's a purple line there. These are very similar to a 2-line simple moving average, but they're calculated a little bit differently. So this yellow line is the Tenkan line, or we can call it the fast moving average line. And the difference in the way they're calculated is a simple moving average takes the average of closing price of a number of bars looking backwards, and takes the average of the closing price. In Ichimoku Cloud, the Tenkan line is the average of the highest high and lowest low in that look back period. Okay. And this conversion line or Tenkan line or fast line, it can indicate a change in trend when it crosses over. But you can get some false signals. You can see several times during this trend that we're pointing to here, it did cross over and it did not indicate a change in trend. Okay, the purple line, or the Kaijun line, is the basis of the baseline. It's similar to a slow-moving average line. And it's calculated the same way. There's a number of look-back periods, and again, in a simple moving average, we're taking the average of the closing price, and in Ichimoku Cloud, we're taking the average of the highest high and the highest low. Okay? And again, when the fast line crosses over the baseline, it can indicate a change in trend, but it can be wrong as well. So there's another line I'm pointing to here. It's the green line, which is at the top of the cloud, and that's called the span A line, the Sinku span A. And Sinku means going first or preceding. In Japan, when they talk about the person who's first up in the batting order on a baseball team, that person is the Sinku. Okay. Now the span A, the green line here, it forms the faster part of the cloud boundary, and it predicts future support in an uptrend or resistance in a downtrend, overhead resistance. Okay, and it's highly accurate until the trend changes. The Sinku span B, it forms the slower part of the cloud boundary. It's that red line. Okay, and again, it's predicting support and resistance areas for the trend. Now that green line, the span A, is actually calculated from the yellow line, and then the red line, the span B, is calculated by looking back an even greater number of periods. You know, we got a number of periods for the fast line, a number of periods for the slow line, and then an even larger number of periods for the span B. The standard settings, if you download or if you install Ichimoku Cloud from, you know, whatever trade platform you're using, standard settings I think are 9 for the fast line, 21 for the baseline, and then 52 for the span B. Now I use different settings, and I've back tested that, and I've come up with some optimized settings. So if you're looking at charts as I go through here and trying to compare, mine are going to look just a little bit different. Okay, the final thing here is the Kumo, or the cloud, and that's the space between span A and span B. And that's the cloud where it gets the name Ichimoku Cloud. And it's simply the software's shading the area between the span A and span B lines and predicting, again, a support region during this uptrend, and then in a downtrend, of course, it's predicting a resistance region. Now, what's interesting is that this is plotted out ahead in time, so this is a predictive indicator. If you look on this chart, we have a cloud plotted a number of bars out in time, so it's predicting where the support is going to be, and if it's thick, there's more support, and as it gets thin, there's less and less support, and that's when price can break through, and you might be seeing that the trend could be changing. So most indicators are lagging in nature, and of course this is being calculated from lagging data, but it is predicting something out into the future, and that makes it pretty special. I'll pause there for just a second. Oh, wait, one more slide here. So there are some false signals as we get crossovers and breaks above the cloud, but when it's right, man, it's really right, and you can see how this trend really took off once we got a break above the cloud and a crossover all happening together. Okay. You'll notice on my charts, if you've looked at Ichimoku Cloud before, there's another element that I don't have on my charts. And that's called the Chiku line, or the lagging line. Now, I don't use that in my trading, and I'll show you the whole system I'm using, and maybe you'll see why. The lagging line, or Chiku line, is used for trade exits, and it's simply price plotted in a standard setting 22 bars back. Well, I don't need that. I can see what price is doing already, and I don't use that as an exit signal. Okay, again, the cloud predicts support areas, and you can see during this trend, as price moved up, even as it pulled back a little bit, as it approached the cloud, it then reversed. And so on this instance, it really did provide very remarkable prediction, because it's being plotted in advance of where the support areas were going to be. So if I were to rate the Ichimoku Cloud as a complete trading system, you know, I've developed this chart here, and I think it does a great job of trend identification. It does a great job sometimes of calling out early entries into trends, and it provides a really good support resistance region identification. But it doesn't give you any price target. It doesn't give you any risk management or trade management, where to take profit at. It doesn't really define an exit point for you. So I don't think Ichimoku Cloud by itself is really a great system on its own, but when we can combine it, it can get a lot better. All right, I'm looking at the questions from Renee here. She's helping type them in. Thank you for that. So I'm going to pause now, take a couple questions. Yeah, I'm seeing it, Renee. It works. Okay, so Ichimoku Cloud, excellent on entry, but bad on price target, also bad on exit points. Yeah, I think it is bad on exit points, because even though you have a support or resistance region, it doesn't really tell you when the trend has changed until it's broken through, and that's pretty late. Okay. And another person saying Elliott Wave is fair, good at trade management. We're going to talk about that. I'm going to demonstrate it. And then we got a couple symbols. So once we go through the Elliott Wave part, we'll definitely look at these symbols. Okay, and we got requests coming in for these. So let's keep going. Thanks for typing those questions in, Renee, for being in the relay on them. So Elliott Wave. So Elliott Wave, a lot of people maybe have looked at Elliott Wave and they're either intimidated by it or whatever, or, roll their eyes a little bit. And I think a lot of educators overcomplicate Elliott Wave, and if you've looked at books or websites and it's like, wow, there's 12 patterns to memorize, and and the people who are doing it can't agree on the wave counts. Man, I use a really, really simple approach to Elliott Wave, and it's very repeatable, and my students and we come up with the same wave counts. And quick question, does this work on futures intraday charts, and what time frame? Yeah, it works on any time frame. What I say is, people go, what's the best time frame to trade? I go, it's the one that gives you the best signals. So, I do this in my live trading room I look at a 10-minute chart and then at a range chart, sometimes do a 1-minute or 2-minute chart. So it works on very, very low time frames. Now, you won't always get good patterns, but when the pattern's there, you'll see it and you'll get a high probability trade. So that's the answer to that question. Okay, so Elliott Wave was developed in the same time period that Goichi was working on Ichimoku Cloud back in the 30s. Ralph Nelson Elliott developed it, and his theory is that price moves in waves or sequences, and that it's based on investor or crowd psychology, and it moves between optimism and pessimism. And you can see the idealized 5-wave pattern there, and the moves up in this bullish pattern are impulsive, and then the moves down are corrective. The big moves that we try to trade are wave 3 and wave 5. Those are the big impulsive moves. Okay, they can occur either in a bullish or bearish market. So if you wanted to see what a bearish 5-wave pattern looks like, you just flip this down like you would mirror it, right? It would look the exact same way going down. And we do trade wave 4, a corrective wave, occasionally, and I'm going to show you that, because sometimes that's all that the market's giving us. The best wave, the most profit's going to be made in wave 3. It's the biggest move. But they're hard to catch. Wave 3, it's hard to spot before it happens. After it happens, it's super obvious. It's a big price move on the chart. But if you get a wave 3 and then a 4, wave 5 becomes highly probable. So that's actually my favorite trade, is because now you've got a pattern of known sequences that have happened, and the probability and likelihood of the next thing on the sequence happening gets really, really high. So I like wave 5s. Okay. Here's some basics. Here's what it looks like on a chart. So this is a Vail. It's a mining stock, and this is actually a real trade that we were trading with our my advisory service. So you can see wave 3 here is a big, obvious move on the chart. It's the biggest move, and that's where I say it's we don't have to do anything really, really complicated. If you come to a chart like this and you go, well, what's the biggest price move? What's wave 3? And we look back and go, oh, look, wave 1 and 2. I've got them labeled here. Wave 1 and 2 don't have to be big. They can be very small like this. And then we go, okay, we had a big price move. We had a pullback. That really looks like a wave 4, doesn't it? And so we can measure it. We use Fibonacci retracement lines, and we expect a wave 4 to retrace into a Fibonacci zone of 38.2 to 61.8. It can go a little short. It can go a little over. But as long as it's pretty close to that range, that's a wave 4. And often wave 4s have an ABC pattern. This one does, ABC. Wow, that's a really clear wave 4. And then what we're looking for when we come to this and go, gee, if we've got 4 waves, 1, 2, 3, and 4 that have followed a known pattern, and now, gee, where's wave 5 going to go? Well, we can use Fibonacci extensions to project. We use Fibonacci retracements to measure wave 4, and we use extensions to measure where we think wave 5 is going to go to. And this is saying, hey, wave 5 is going to go up between 6.27 and 7.76. Well, we got a price target and a highly probable move. That's powerful stuff. That's very powerful stuff, okay? And now we put this together with Ichimoku Cloud, and we look for our entry and trend confirmation. So back here on wave 3, we could have caught that one because we had an entry signal from Ichimoku Cloud because we had price breaking above the cloud, and we had our fast over slow crossover happen before that. So when they happen in conjunction, right, you get a crossover and you get a price breaking above the cloud, telling you the trend is probably ending. That was awesome. And then we went all the way up in wave 3, made nice profit. Then we got a wave 4, and we're looking for wave 5, and there's proof of wave 5 starting. So again, we get a crossover and a price break above the cloud. And this is actually a live trade we took, and we just closed it. I think it's like about a 15% profit in about a month. So pretty nice, pretty accurate. So when we get the systems working together, we use Ichimoku Cloud and Elliott Wave together. Then we start to fill in all the elements that we need here for a complete trading system, right? We've got trend identification, early entry, and support resistance from Ichimoku Cloud. We've got excellent price targets from Elliott Wave, and it gives us a pretty good exit point because it's got price targets, right? So, but we still got a couple gaps here. We don't have risk management, we don't have trade management. So how do we close those gaps? Well, at Follow Me Trades, we have a very clear trade and risk management system that we use. Our risk management, we control that through our position size, and we have a formula that we use so that we only put 2% of our account at risk for any given trade. So that, that's not the position size, but when we identify an entry, we also identify an initial stop price, and we take the difference between the stop and the entry, and that's our risk. And then we divide that into the amount of money, the maximum amount of money we're willing to lose on the trade, 2% of our account, and that tells us how many shares to buy. Okay, pretty simple math. And then we manage the trade we use Dow theory. So trends move in in an uptrend. It's a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and that Dow theory tells us that that's an uptrend, and the trend continues until that pattern is broken. And you can see here on wave 5, right, really clear: higher high, higher low, higher high, higher low, higher high, higher low. And what we do is, as new higher highs are established, we trail our stop up to the previous higher low, and we just keep doing that. And we take profit along the way. At key reversal points in profit, we take a third of this position off to lock in profit, and then we do it again as it crosses key Fibonacci lines or reverses. But we let that final third run until this pattern of higher highs, higher lows, higher highs, higher lows is broken. When we finally put in a lower low, it's going to take out our previous stop. So that way we stay with the entire trend for at least a third of the position to maximize profit. So that's how we teach and do it here. You'll see these pyramids. These pyramids are calling out the key higher high, higher low points, and that's the applied reality trading software from Traders Coach. We work closely with them. So you can use those. That's great software, or you can just do it without by tracking higher highs, higher lows using that method. And do I use Fibonacci levels for price targets? Absolutely. So for a wave 4 target, I use Fibonacci retracements, and for a wave 5, I use Fibonacci extensions. So yes, absolutely use them for price targets. So when we bring all this together, when I look at Ichimoku Cloud, Elliott Wave, and then our risk management techniques, well, this fills out the scorecard pretty nicely into a complete trading system for identifying great trades and for managing risk. All right, I'm going to keep rolling, let's look at some live charts. Okay, I'm going to show you a couple of trades that I like right now, and then if you got symbols you want to look at, Renee's already given me a couple, but let's type in some more if you got them, if you want to look at them. And now I'm in my comfort zone. When we're talking about trades, man, I want to have a chart in front of me. All right, so here is the trade station, and we've got live charts here, and what I'm showing you here is a trade that we got into about 2 weeks ago. This is DVA, DaVita Healthcare. Now look how clear this is, right? I said wave 3 is easy to spot. Well, we got what's the biggest, most dramatic price move on the chart? Well, it's right here. It's this. This is wave 3. So that's a bearish wave 3. So I just use my Fibonacci retracement. I look at here's wave 1, 2, 3. So I measure wave 3 and I look for wave 4. And there's a wave 4 correction to that impulsive move down. Now it was pretty high. It went above 38.2, it went above 61.8, but it didn't cross this threshold of 76.4, which would disqualify. So that's a wave 4. And then it started back down. And we use our wave 5 extensions to project where that's going to. Now I came across this trade about 2 weeks ago, and so price was here. So I took this entry at this light blue line at 70 bucks, took a short position, traded with a put option. But all my entry criteria was met because I've got a great price target, still plenty of room for profit, and I've got Ichimoku Cloud telling me price had broken below the cloud, and it looked like, and look how thin the cloud was where it broke through, right? And where it provided support when the cloud was thicker. Pretty impressive, right? And now it's changed colors and shows, very clearly a change in trend. So entry could have been here as it broke through the cloud. I didn't come across it till here, but there was still, I use a risk to reward calculation. Here was my entry. My initial stop was up here, and I look at the target, and it's simple. The price to the target from the entry has to be greater than the price to the stop. I don't want to trade something where I have the potential to lose more money than I'm going to make. That's not good math, right? Some trades are going to lose. That's a fact of life. My running win rate for about 5 years now is around 70%, between 65 and 70% it floats. That's a good statistic. But more importantly than win rate is the payoff ratio. What's the ratio of the size of my winners to the size of my losers, right? If I can win more than 50% of my trades, and if my winners are bigger than my losers, I'm a profitable trader, right? And the more, the higher I can get my payout ratio out, the more profitable I'm going to be. Okay, so that looks, that's how I do it. Some questions coming in. Do you trade options using this methodology? Absolutely. So all option trading, in my opinion, should be based on analysis of the underlying asset, right? All option trading should be based on analysis of the stock or the ETF or whatever it is you're wanting to trade. And once you can establish price targets, trend direction and price targets, then you go choose your favorite option strategy. I keep it simple, right? If I got a downtrend, I'm buying puts. If I got a big uptrend in price targets, I'm buying calls, right? Now, when I have a price target and a clear trend direction, that's a good strategy. I don't need anything more complicated than that. Okay, we're going to look at SLW in just a minute. Just got a couple more here. How about futures trades that look good now? I only look at futures on an intraday basis. So the market's closed, so I can't give you a good trade right now. But I do look at like the S&P E-mini as I think that's a clearer picture of what's going to happen over the week for the S&P 500 because it trades around the clock. You have more data, more so than like SPX or SPY. Okay, so that's a trade I like, and that's how it looks on a live chart. This is a wave 5 trade. Let me show you one more that we're in. This is a corrective wave trade, so a wave 4 trade that we're in right now. And this one's still got potential. So this is CLVS Clovis Oncology. Now, what's the biggest, most dramatic price move on this page? Well, it's obviously this drop here with the gap down. Right? Huge move down from over 110 bucks down to where did it bottom out here at about 12.50. But look how it put in this really, really flat bottom and channel, And then as it started breaking up, right, we have to really zoom to see it. Um, we got a really clear signal from Ichimoku Cloud that, hey, we had a crossover and a close above a very thin cloud. And that said, boy, this could really be breaking out and get ready to go. And we got into this at 1742. We're still in it at 2316. We're in about a 40% profit on this trade. We've already scaled out once. We've taken a third of the position off, locked in some profit, but we're looking for it to get up here up about 32 into this wave 4 zone because we got Elliott Wave predicting a price target zone for us, which is simply, you know, a retracement to this big massive move down. So this is an Elliott Wave retracement zone up here, 38.2 to 61.8, and we'll see if it makes it. But even if it doesn't, you know, if it falls short and we only double or triple our money, well, that'll be really disappointing, won't it? So that's a great trade, and we're in it right now. So let me go look at some of the symbols that folks had typed in before. So Apple. So Apple for me on the daily chart, you know, one of the things that when I teach people when we're analyzing charts is I go, you look at a chart, you ask yourself, does it fall into one of three categories? Is there a clear trend? Is it in a channel, or is it a mess? Right? Well, this is in a messy trend, right? It's a very volatile, messy downtrend with huge swings. So Apple on a daily chart for me, I can't really do much with it. I can't project much on it. But when I take this down, I just put this trade on Friday on a 60-minute. When I go 30 on a 60-minute chart, we got a pretty clear bullish wave 3, and now we're in a correction to that, and the target zone is down here. Now this is only a short-term trade on a 60-minute chart, probably going to be in it a week or two, right? That's a really clear signal. So I like Apple to the downside, and I got short on it here at 103.37 with a put contract, and so far we're smiling. It's working out. And we got a target zone down here, just a Fibonacci retracement zone on Apple on a 60-minute chart. Let's look at Starbucks. Someone type that in. And we tried to short Starbucks earlier this year, and it just never did work out. Should teach me to not short a company I like. I like the products, right? So remember I said we look at this. Now we did have a really pretty nice clear trend. We had a bearish move down, a retracement to it, and it really looked like it was going to put in a wave 5. Well, it failed. All right, so this trade was actually a very small loser for us. The nice thing about trading with put options is if it goes against you, the risk is controlled, and you can get out early. You know, I trade with a stop on every trade. When this came up and touched our stop, I just went back and sold the put. You know, less than I bought it for, but certainly not 100% loss. So very controlled risk. So now Starbucks is meandering in a channel. Remember I said I look at a chart and I go, is it in a trend, a channel, or is it a mess? Well, currently it's in a channel. It's in a channel, and until it breaks out of that channel, not much we can do with it unless you have a strategy you like for, channeling stocks. Okay, I like trading trends, so there's no trend on Starbucks right now. Okay, Intel. Yeah, I worked for Intel for 14 years. And I was a program manager there, and man, I joined in '93, and the stocks like split and doubled every 2 years like clockwork. That's when I first started trading. That was when I got stock options and employee stock, as an employee of Intel. It's like, gosh, stock trading's easy, right? They give it to you and it just goes up. I'm pretty good at this, and I found out it takes a little bit more than that. I got some painful, expensive lessons, and then started really digging in, and kind of that started getting me where I'm at today. So Intel on a daily chart here. What do you guys think? Is this a trend, a channel, or a mess? Well, it looks like a mess to me. There's no clear trend here. It's not in a channel. It's very volatile. All we can say is it's in an uptrend. It's heading up. It's put in new highs. It's taken out these previous highs here. It's above the cloud. We got some pyramids. We got some greens indicators here. Where's it going? No idea. No idea whatsoever. So we are above the cloud. We do have a thick cloud. But does that mean it's going to channel above this, or does that mean it's going to continue and go make impressive, meaningful new highs? No idea. So when I have no idea, I don't sit here in anguish over how to trade Intel. I move on. I go find me a good chart that's got a good pattern that's clear, and I trade that. So We got a couple more symbols. CHK, I don't know what that one is, so this will be fun to see. Chesapeake Energy, okay. So this, I have looked at, I have analyzed it before. Chesapeake Energy. So not surprisingly, this chart looks very similar to oil, okay. Let's just look at oil. And someone asked about uh, futures. So I like looking at the futures here on oil. And then, you know, I'm not gonna trade futures anything but intraday. I'm not gonna hold futures contracts overnight. I don't like that. They can gap, right? A highly leveraged thing that can gap, that can hurt you. So, you know, oil, big, massive downtrend from over 120 bucks a barrel down to, you know, almost 30, and then putting in a bottom. And we said earlier this year, we said, hey, when this comes out of this bottom, we think this trend might be changing. Early indication of it, 37.09. We were right, and we've got lots of blog and YouTube videos on that. You know, and it went up to almost about 54 bucks, and it was due for a correction. We got a really, really sharp correction, a little bit bigger than I expected. But this is, you know, so this whole big move up is a wave 4, but there's 5 waves inside of it. So this is 1, 2, 3, 4, and now we're in 5. 5 is starting. And this wave 4 correction that we just experienced in the last few months went pretty deep, but it didn't break the rules. It didn't go down to 76.4. And now it's coming up off that, you know, again, really, really, a really, really strong move. We got higher high, higher low, higher high, higher low. We expect this to go put new highs. We're up above the cloud. So we're starting to get serious about some oil trades. And so, you know, Chesapeake Energy, we go back to this one, it's doing kind of the same thing. And so I would be bullish on Chesapeake Energy. I think there's a good entry now. And if I were getting into this now, my target for it, long term, this is going to take a long time. This ain't going to happen next week. But the long term would be to get up to this 11 bucks region. That's the bottom of a wave 4. If I were going to take an entry on this Monday morning, I would put my stop right there. Right there at about 418. And we can just do a quick visual. Go, there's our entry. So the distance from our entry to our stop compared to the distance from our entry, I got a straight line here, right? Distance from our entry to the target. Well, this is much bigger. This is 2 or 3 to 1. So that meets my criteria for risk to reward. So I like this one. One thing to watch is this previous high. Is that going to provide some resistance? I don't think so, because this is just like oil, right? This was 3, 4, and now this is 5, and the targets are pretty high. So nice one on Chesapeake Energy there. Okay. Someone's asking about SLW. Let's take a look at SLW. How am I doing for time, Renee? I wasn't, you know, I didn't start on time, so I don't want to make sure I don't run over my allotted stuff.
Yeah, you
Silver
got
Wheaton
about 5
Corp.
minutes.
Okay, good. Thank you.
Thank you.
All right, so Silver Wheaton Corp, you know, obviously, you know, using my deal, you know, we look and we go, is there a trend? Is there a channel or a mess? This is clearly a trend, and so the trend started down here. It's been going up. Now look, we got this really sharp pullback. So it's at a key level. Is it gonna find support at the cloud, or is it gonna bust through the cloud into a wave 4? Don't know yet. We have to wait and see. But if it does go to a wave 4, where's it gonna go to? Well, let's go see. You know, first move up, next move down. There's not a clear 1 and 2, but that's about where we would put it. So if it does go down, here's the wave 4 retracement area on SLW. And it's not that far away. By the time it's confirmed, we're already in it. So kind of a tough one. I wouldn't try and trade this on wave 4. I wouldn't go long yet, right? Unless it reflects up off this, and then you go, what's the price target? What would be awesome is to get a wave 4 down into here and then look for 5. Look for the next move up, and you can get a target on that. So that's my look at Silver Wheaton. People did ask about intraday, so let me pull up my intraday charts. So here's I trade intraday the E-mini gold and oil. If you can look here, what we do on this, we're looking for that same kind of setup here, right? We want to see this breakout. Now there are false calls, but we want to see this breakout and go ahead and take that. But what we do intraday on very, very small time frames is just back it up. So this is a 8-tick range chart, right? It moves at about the same rate as you would see on a 2-minute chart, but we like range charts. Oops, no, I do not want to close it. I want to do that. I just back it up with the 10-minute chart and make sure that we're with the big trend. If we're going to go long on oil on a really, really small time frame. I want to make sure I'm with the big trend. And so I don't want to take a long look down here if I'm under the cloud, right, coming into resistance. I just want to make sure I'm up above the cloud, moving with the trend. So that's how I do intraday trades. So let's go back here and wrap up. Okay. We looked at some live charts, right? So I'm running out of time. I'll just show you real quick. We can scan, right, using the scanning tools built into your trading platform. I use TradeStation. I can download. I can import the entire S&P 100 or 500. Put my Ichimoku Cloud things on here. And now it's really tough to analyze this and find the best few trades. So I export this, right? I can export this entire thing over to Excel with all the data and just build a few formulas, right? What I want to make sure is that we got the price below the cloud and I'm really in a downtrend, right? And build in some logic here and go, hey, that's a pretty good bear signal. And then I've got, out of 100 stocks, right? I'm not really interested in longs right now. You know, we've at the end of a 7 or 8 year bull market, so we're really, really high levels in the market. So I'm looking at any short setups for me. So out of 100, I can quickly come up with a list of about 16. Well, that's a lot easier to go deal with. And I looked at a couple of these. This is from today's data. And I go, oh, look, let's take a look at Disney. Disney was on that list. So what's the deal with Disney? Ichimoku Cloud saying it's bearish, and there it is, right? Big wave 3, nice wave 4. And wave 5, evidence of wave 5 starting, and we just look at this and go, what's the wave 5 target? Right there's wave 4. Yeah, that was good. Where's wave 5 going to? Let's project it with the extension tool. Go, wow, wave 5 target zone's way down here on Disney, below 85 bucks. It's currently at 95. We're below the cloud. Everything's a go here, man. So there's a nice short trade on Disney. And expensive stocks would be a good one to catch with a put option. So that's how we can scan. That's pretty cool. So next steps, you know, what should you do next? If you liked this information, if you thought it was interesting, you know, analyze some charts, put the indicator on there, and try doing it yourself. You know, if you're going to do it, you know, do it in Sim first. You know, any new system you try, you ought to prove you can do it, prove you're going to be profitable in your demo account before you just start putting real money on the line. I have a stock picking service, and if you're interested in that, I'll talk just a minute. And I've got a class that goes into more detail on the Ichimoku Cloud, how to trade like I do, my trade rules, my exact chart setups, and proprietary settings on Ichimoku Cloud. So the stock picks here, we're doing good. Every year, you know, when the market was trending, it was easier. Last year was a little tougher. We still made profit, just about 30%. This year we're on track to at least match last year and maybe blow it away. And so, you know, we're trading and making profit. A key part here is risk management. Anybody can get lucky once in a while, but if you don't use good risk management, when you're not lucky, you're going to take a big hit. So we control the downside very, very carefully, and I teach that. I provide all the tools to do that in my stock picks. So, and these are picks I'm just taking them. That's how I got started. I'm just, you know, these are picks I'm taking. I'm doing good at it, and people started asking me to share my picks, and I put this service together. So it's 1 to 2 picks a week. These are ones I'm buying with my money. They include option contract details, so you can trade it with options or you can just trade the shares. Either way, have the data for that. And then as the trade plays out, as we take profit, move a stop, manage the trade, I give updates on that. Okay, we're in most trades about 4 to 6 weeks. And if there's a midweek update, I'll shoot a quick update out. So you can give that a pick, a try. Right, the list price, 127 bucks a month. People are making good money and making that money back even with smaller accounts. So for the webinar here, I'll give a 23% discount. You can get it for 97 bucks a month, and you can try it for 10 days for 7 bucks. So there's a URL, and let me post a URL into the chat area where you can go take that $7 trial. 7 bucks, 10 days, and try it out. You'll get to see 2 weeks worth of picks. We got some great picks coming out this weekend. So you'll be able to see them if you get in now. And try it. If it's not for you, that's okay. Send us a note, cancel, no hard feelings, and no questions asked. We'll give you your 7 bucks back. So it's basically a free trial. So if you're interested, you know, I definitely encourage you to check that out. 1 minute warning. Okay, here we go. Also, I have this course. We just launched it on August 17th. So this is the Ichimoku Cloud course. List price of this course, 150 bucks, 149. You can get it now from this webinar, 38% discount, $99. So if you're interested, here's a link. You can go to a landing page, and it gives all the course information. We're getting great feedback. People love the course. A lot of people signed up, and great testimonies on that. So, and they're on the website. You can go read it. Well, hey, thanks. Looks like my time is up. I sure enjoyed and appreciate being here. Thanks, traders, for showing up and for all your questions and for looking at your stock picks and all that stuff.